Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, good morning. Welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge in financial freedom. Today, I've got a little headline about Bank of Japan's potential for more rate hikes coming in December. It's looking a little more possible. They've got some data that they haven't wanted to see, and with the current economic state of the United States, they're seeing some potential for a rate hike and the strengthening of their dollar. So let's dive on in today and get you prepped for some success. We've got the stock market sitting a little bit red from last week. We are seeing a little bit of some change in some of the sectors in the pre-market though. So we will dive on in and go through that. We've got Nvidia, which is sitting down 3.26% from last week. It is down 2% in the pre-market and continuing that downtrend. We've got Apple, which is sitting down 1.41%. It is making a little reversal in the pre-market. Got Berkshire Hathaway, which is sitting up 0.55%. In the pre-market, it is sitting neutral. We've got Amazon, which is sitting down 4.19 from Friday. In the pre-market, it is up 0.31%. We've got Walmart sitting down 0.26%, looking pretty neutral. In the pre-market, it is making some gains. It was up 0.3% earlier when I first checked it, and it is now up 0.63%. We've got Eli Lilly, which was sitting down off of the announcement of RFK Jr. being the health department head for Trump's administration. Eli Lilly is making a little bit of a recovery. It is up 0.13% in the pre-market after that 5% drop last week. Got ExxonMobil, which is sitting down 1.04% from Friday. It is sitting up 0.26 in the pre-market. Tesla was making some big moves off of the announcement of him being in charge of the Department of Government Efficiency. It was up 3% from Friday. It is sitting up 7.3% in the pre-market. So definitely looking like it's going to be continuing that little uptrend. We've got Microsoft, which was sitting down 2.79% from Friday. It is up 0.3% in the pre-market right now. We've got Google, which is sitting down 1.76% from Friday. It is up 0.45% in the pre-market. Meta, which had taken the big hit on that tech sector, sitting down 4%, is looking neutral in the pre-market so far. It is up 0.02%. For the crypto side of things, though, we're looking a little green this morning. Got Bitcoin up 0.74. Ethereum sitting neutral, down 0.34. We got Solana, which made some big moves over the weekend. It is up 2.68% on the day. Got XRP, which has also been making some big moves, up 6.73% right now. BNB also sitting pretty neutral, down 0.35%. We got Dogecoin, down just a little bit, 0.58% right now. Toncoin is sitting up 1.11. We got Cardano also made some big moves this weekend. It is sitting at 73 cents and up 4.9%. We got SWE sitting down 2.75%. Avalanche is also pretty neutral right now, sitting up 0.46. We got WorldCoin sitting up 1.21. Got, I don't know what this one is, Zebu. Just popped up on my market cap here more recently. Oh no. There we go. It is sitting down 1.92%. We got Tron Coin sitting up 0.6, and Shiba Inu is sitting down 0.88. For the economic calendar today, we don't really have any super heavy data for the week. We've got Fed Goolsby's speech today and NAHB Housing Market Index. These will be for newer home builds and is more a survey of the market. So this is coming out at 10 Eastern time, and both of those will be coming out together. Later in the day, we have some treasury bills that are going to be auctioned off, and that's about it for the data from America. Later in the week, we do have, where was it? I think it's Wednesday. We do have mortgage applications for Wednesday. Crude oil, also a Wednesday news drop. And I believe it was Thursday that will be the heavy data. We have initial jobless claims and continued jobless claims. That will be for Thursday. And then existing home sales as well on Thursday. Other than that, it is a pretty light news week for the week. So we will kind of see how this week goes with no heavy news to really send us in either direction. Kind of allows the markets to decide where we should lie on things. We do have the fear and greeds for the stock market sitting 51 and neutral. Got some potential to go either way today. I'm looking at more of a swinging back towards the greed side of things. We did hit some fair value CME gaps on some of our indices and set some reversal signals. So we'll dive on into that after I get through this. For the crypto side of things, we're sitting down 7 points at 83 and extreme greed. We hit very high on that fear and greed index over the weekend. So looking like some cooling off might be heading our way. I would look more for more sideways movements and not some super heavy drops for the beginning of the week. For the liquidation heat map on the 3-day, we don't really have any hot spots that will send us in either direction. If you zoom it on out to the weekly, you can kind of see the hot spots are more above us. We've got some at the 90,000, 92,000 mark. On the bottom side, it is sitting down at 86. That's been the hot spot for a little while now. If you zoom it on out further, you can kind of see as we've been staying in this range for the past week or so, we don't really have any hot spots to the bottom of us. It is mainly building up on the top side. Every time we get up to that $92,000 mark, people enter some shorts, and it's been stacking up. So that 92, 93, depending on what exchange you are on, is kind of the hot spot for the top side. Let me get back over to TradingView and pull up the Bitcoin chart before I dive on into the chat. We've got Bitcoin making a little bit of a reversal this morning from that 92,000 mark that I had drawn out. We had made a break into that. That was that breakout target from the megaphone that I had drawn. We have had this 236 be strong support. So if we can see some money flow picking in for the daily, because it is still green. If you zoom on out to the daily, you can still see that your money flow is green. It looks like it's kind of at that point where it's stalling out though. So seeing a little bit of a sell-off after we hit very, very extreme greed is definitely possible. I had seen an article about someone in a Satoshi era wallet who had 2,000 Bitcoin who just sold off some Bitcoin. I don't know if they had sold off all of it, but these are some local topping signals as we have hit this 92,000 mark. If you zoom on in to the hourly, you can kind of see here we have had some money flow come back in, but it's not very heavy. You did get reversal signals on your prime oscillator. Your prime oscillator is now red. You can kind of also see on your MACD as well. It is set to cross that indicator line and is kind of pointing towards coming back to that zero line. So with your oscillator here being light green and it basically just fell off. So could definitely come back down to this 236 and create some more support. This has been an easy way to see some cool off on your fear and greeds. If you really want to see more cool off on that fear and greed, we've got this golden pocket down here that is sitting, or the 382, which is sitting at 83,000. So could be a definite point for some bouncing as well. If we see continued weakness in this more of a pullback, we'll just have to kind of see how market open goes. There is definitely some potential for continued pullback on the TradFi side of things, and we would just need to see more of a breaking from your TradFi and Bitcoin and less moving in lockstep. So as everything pulled back for TradFi on Friday, you had kind of seen some pullback on Bitcoin. As you can see on a 15-minute chart though, we do have continued selling pressure. We did get some oversold signals. Your MACD just crossed the zero line, and it's a pretty heavy cross. So to see a little bounce here is definitely plausible, but your money flow is definitely seeing some selling pressure on shorter time frames as well as your higher time frames. About the only thing that is green for money flow is that daily chart like I had talked about, and it looks like it's kind of leveling out. So I would look for some downside, maybe to the 87,000 mark. That is the 236 on your Fibonacci retracement, and that's pulled from the low here before we moved on up. Let me say good morning to the chat real quick. We've got Kyle Fields in here with the yo. Broken Oshi, no dinero. Good morning, good morning. Darren does things. Wake up. Today's going to be a good day. Yes, it is. It is Monday. I'm definitely looking forward to this week. I might get to do some new things at work. We've got All Set in here. Good morning, good morning. We've got French Toaster and Baba Yaz in here as well. Good morning, good morning. Let me pull up the TradFi side of things. I had went over this on Friday before market open, and I had talked about some of the higher downside potential, especially with the data that was going to be coming out, and it looks like we went even lower we hit some of those bottom side targets that I had talked about on some of the indices. You've got the Nasdaq, which came down, completely skipped the CME gap and created a bigger CME gap on top of it. I didn't draw that out. It's kind of pointless to draw a double CME gap there. But we did come down to this bigger one. We blasted through the top side of that and came right down here to that midline, which I definitely talked about being a bouncing point for this week. Instead, we saw very hard sell-off in the TradFi market after some data that had coming out. So definitely saw that downside a little bit quicker. It looks like your MACD is getting some curvature. You've got your prime oscillator, which is now in that light red instead of some heavy red, and is pointing back to the upside. Could definitely see a kind of a double bottoming where this midline could come back into play. That was that 18,606 mark with, and see another reversal signal on this prime oscillator before continuing on out. You have your money flow, which is decently red underneath here. As you can kind of see, it is kind of light outflow though, so not really strong selling off or strong buying from Friday, but that could definitely switch up very quickly with the market open. So definitely potential for that 18,606 and continuing on up to the top side of this, which is that 18,765 mark. The SPX definitely got some big downside as well. Created a CME gap on the way down, which would definitely have some play in it if we can see some strength. As you can kind of see, its chart is set up very similarly. These kind of move in lockstep sometimes. You've got your money flow, which is very light red. It is set for a reversal. You've got your MACD, which is setting up for a reversal as well. So didn't end up getting all the way down to this midline, which is sitting right above the platinum pocket on a Fibonacci extension that I've had drawn out for a little while. That one line on the fib extension was not able to hold, so could definitely see us building some strength in this range before we try to make that move on out again. This CME gap is definitely going to be in play. Let me draw that out for you. We've got the top side up at 5,941 and the bottom side down here at 5,916. That midline is sitting right underneath your one extension at 5,928. So that could definitely be a point for us to come back up to if we see some strength. This is going to be a no data kind of day, so nothing to really swing us too crazy either way, except for that the new housing data. It's not going to be too big of a market mover though when we do have building permits, which is coming out tomorrow, and your initial jobless claims and continued jobless claims coming out on Thursday. Those will be the more heavy data drops in a no data heavy week. So could definitely see some waffling around in this empty range right here, which goes from the 5,865 mark up to the 5,914 mark. This will be a point where we could really make some strength. If we end up breaking back down into this CME gap, could definitely see us come down to this 5,823 mark before we kind of make some strength like you saw on the Nasdaq. Let me move over to the Dow Jones. it also got some pullback, not as heavy as the Nasdaq did, and not as heavy as the S&P did. Definitely created a small CME gap, but nothing too crazy. You are staying above the 1 line on your Fibonacci extension, and this CME gap looks like it might not get touched on. That top side was 42,844, but it looks like we might make some strength here at this 1 line. That 43,106 could definitely be a point of bouncing and continuation. You can kind of see your money flow is the same as the rest of that. It is light sell-off, but your MACD is set to make a reversal. Your prime oscillator is also light red, and it's got a reversal signal here with heavy oversold signals that have been shown. So definitely looking for some continuation, but I would look for a little more downside before that continuation. For the Russell 2000, we ended up coming down extremely hard. That just signals more of the risk off sentiment is not quite there yet, where we've got a lot of unsurety from your government. They've talked a lot about the market being strong and inflation isn't that bad, and they're talking out of both sides of their mouth because Social Security just got a 2.6% increase on on their monthly payments going into next year. So you've got your CME gap, which is sitting here, that we're on the top side of. That's that 2,300 mark, which I had talked about could be a little bouncing point. It looks like we didn't really see the oversold signals on the prime oscillator like the other indices did. So could definitely see a little more downside potential on that, with that 2,282 mark being a point where we could see a little bit of a bounce. That would be very similar to the Nasdaq, as I had shown you earlier, and could be a nice little signal for some reversal in your risk on assets. It's, as you can kind of see with Bitcoin getting a little bit of a sell-off this morning as well. The risk on is not as heavy as a play as some of these more sure assets like your Nasdaq are going to be, and the S&P is going to be. You also saw gold with heavy sell-offs. It is below the 0 line on that fib extension I had drawn, and came down here to this CME gap that I've had drawn out for a little while, and was definitely some signals for buying potential. That bottom side was 2,569, and as soon as we dropped back below it, very quickly we saw some buying pressure. We dropped below it again, buying pressure. Drop below it again, heavy buying pressure, before we moved back on up to the upside of it. You can kind of see your money flow is extremely green. We've got your prime oscillator, which is sitting at a point where it just went red, but could easily go green again. Your MACD is kind of set to get some curvature to the downside, but we'll kind of have to see how it goes at market open. This 2,600 mark, it could definitely be a point that we come back up to with market open after bouncing down here at this 2,585 mark, which was the top side of that CME gap drawn from way back here before we ended up blasting on up. So looking for a little bit of strength in gold and your other precious metals. Silver kind of did some waffling around here on the bottom side of the fib extension I had drawn. looking like we got a triple bottom. So just waiting for that money flow to really start ticking back up. Your hourly is looking green on money flow, but waiting for that daily to really get that kick. If you if it would load, there we go. It's the money flow on the daily is still sitting a little red. Your prime oscillator though just hit that light red point. So waiting for that reversal signal and the move on up back to this 236 and $31 on silver. Kind of waiting to see the rest of the market open though. Definitely saw some downside potential, but could easily just be some bouncing points on the downside before we move on up, or just kind of move sideways. You know, we did get some strong movements off of the Trump announcement of winning, so don't know how much downside potential there really is when there's some definite strength that we'll be seeing going into next year. Let me touch on this article real quick before I head on out to work this morning, because this was the headline for the day. We have Bank of Japan governor sticks to stance on more rate hikes despite U.S. uncertainty. This is an update on an earlier headline. We've got the Bank of Japan's governor affirmed that the door remains open to more rate hikes, saying that they could come before clarity emerges with the U.S. economic policy, even as he carefully avoided giving any clear hints on the timing of the central bank's next move. There are countless uncertain and changing factors, including the U.S. economy. Rather than waiting for clarity on all of them, we will make appropriate policy decisions looking at data and other information available by each policy meeting, Ueda said at the news conference Monday after speaking to business leaders at Nagoya, Central Japan. While the Bank of Japan head said that the bank would closely monitor economic measures by President-elect Donald Trump, he refrained from offering his views on their potential impact on the global economy. Since Trump was elected as the next U.S. leader earlier this month, speculation over his policies, such as additional tariffs on foreign-made goods, has shaken the financial market. You know, and he's definitely talked about as high as 60% on some of those tariffs, which will kind of force a bunch of these countries to look internally to fix things instead of looking externally. The dollar has strengthened on expectations that higher tariffs could accelerate inflation by increasing price of goods imported to the U.S., sending the yen to its weakest point in nearly 4 months. Given the yen's sharp weakening, some economists expect the Bank of Japan to raise interest rates as soon as its next policy setting meeting on December 18th and 19th. A weak yen raises inflationary pressures as Japan depends largely on imports of food and energy. The local business leaders attending the meeting with the Bank of Japan's governor on Monday asked the central bank to consider the stability of the currency market when making policy decisions, because the yen's depreciation has had negative effects on companies by raising the cost of importing raw materials and energy. Stabilizing foreign exchange rates is not a direct mandate of the Japanese central bank, but Ueda said the bank would closely examine how the yen's weakness will affect the bank's price outlook. And this is something that they had talked about when they made their first rate hike all those months ago, that by the end of the year, they wanted to see the yen kind of stabilized around that 140 to 135 mark, and they are quite outside of that mark. Higher costs for Japanese firms could be especially concerning if they are unable to pass those costs on to consumers. And this is why they're looking so heavily at the Trump administration's policies. Many companies in the country have so far been reluctant to shapely raise prices, but there are some signs that this is starting to change. In his morning speech, Uday reaffirmed the bank's stance of continuing to raise interest rates as long as the economy improves as expected. The actual timing of adjustments will continue to depend on the developments in economic activity and prices as well as financial conditions going forward, Uday said. Gradually adjusting the degree of accommodation in line with the improvement in economic activity and prices will support long-term economic growth and contribute to achieving the price stability target in a sustainable and stable manner, he added. The governor said that whether overseas economic activities grow moderately and whether wages in Japan continue to rise hold the key to the bank's economic outlook. Although Uday didn't give a strong hint that a December rate increase is coming, he emphasized the need for gradual monetary tightening. Given that the real interest rate remains very low, he sees the risk that underlying inflation rate could at some point exceed the central bank's 2% target. If that happens, we have to raise interest rates at a faster than expected pace. We will appropriately adjust the degree of monetary easing to avoid such a situation, Uday said. And this is coming at the same time that the predictions for the U.S. cutting rates in December have decreased quite heavily. It kind of peaked at that 80%, and this was when we got some mixed data last week, and with the rest of the Fed chairs that spoke the rest of the week, it was kind of some mixed signals where you've got Jerome Powell talking about, oh, the need for rate cuts is not as great as people think. We need to kind of slow down on that. Where you've got a few Fed chairs who have been saying that monetary policy is extremely restrictive right now and we need to get things going. But on the overall, you kind of got more of them in line with what Jerome Powell has said. And as you've seen inflation kind of tick back up, you don't really want to cut those rates while it's moving more to the upside. You would kind of want to wait on that instead of forcing more rate cuts down on people and risking more of that inflation going higher instead of coming back down and causing overheating. You just now saw the jobs data kind of look more positive than it has in a while. And like I had said, when we got that first 50-point cut months ago, we wouldn't really see that impact job data for about 2 to 4 months. And that's kind of in line with what we're now starting to see. You were now starting to see the first job numbers come out positively for the U.S. And this is all something that the Bank of Japan will take into account as you see your US dollar, which has been gaining strength extremely quickly on the yen. They don't want that to get too far out of line. They want to pull that yen strength a little bit higher. And that's why if we're not going to cut rates in December, they are all set to hike those rates in December in Japan and kind of bring that strength back to Japan and counteract some of those policies that'll be coming into next year. As you can kind of see here on the Dixie, we have been gaining massive strength here. We are at a point where we haven't seen highs since we haven't been above those levels since back in November of last year. So this is a point where we could definitely make and continue some strength. You can kind of see the inflows are ticking back up after a little bit of sideways movement there. Your MACD is really set on some more upside. You did get some slight reversal signals here, which completely got ignored at that 50% line. You can kind of see here, you got a small little pullback, but we just continued on up to the upside. I would look at some upside targets on the Dixie above $107. You've got some points here where we ended up getting heavy sell-off on the dollar back here in September of last year. And if we can kind of make this a support area, you could definitely see these other currencies getting to a point where, like in Japan, they're going to have to do something to counteract that, especially if you're going to see a policy shift with increased tariffs. Trump has talked about anywhere as high as 60%, and that's going to be something that these other countries are going to have to battle against. So just something to keep in mind as we go into next year. And if we don't get that rate hike, if we don't get that rate cut, these other countries are going to make policy shifts to kind of counteract it before you might see a trade war kick off. So let me say hello to the chat one more time before I end up sliding out of here. We've got Museum of Corruption saying wake and bake. The Dusty Hunt in here. Good morning, good morning. We've got Adam D. Shout out to Piper Academy. It's been a month or so since I've been able to support. Been back and forth in Western North Carolina since the storm. Well, thank you for coming on back. Thank you for the support. We're always glad to give the alpha to you here in the mornings. We've got Piper, who will be coming on here at 9:30 Eastern time with OC Guy and the morning market report. So if you get the chance, tune on into them this morning as well. We've got Massey33. Morning, all my machines. When sleep, oh my God, tired with like 15 cups of coffee. Yeah, I definitely feel that one. It was a long weekend for me. So I've been through like 4 cups of coffee so far. Got All Set in here saying good morning to Alexandra G. We've got Lunar Beaches Crypto in here. Good morning. Good morning. He did his first Markets After Dark show last night while I was sleeping. I'm going to have to check that out later because I've definitely been waiting to see that. I've been excited for it. I was sad to see him go, but I'm glad that he gets to finally he got all settled into his new house, and am excited that he got to do his first show this Sunday. If y'all didn't get the chance to check it out, you should definitely go back and watch that. It is here on Piper Academy as well. I don't know what time he goes live every night, so if you could leave that in the chat for the people and let them know what time you're going live every single night. It'd definitely be, I guarantee they'll appreciate that. We've got Clay the Great in here saying smash the like. And Adam D in here with some otters. So thank you to everyone that showed up. Make sure to check out the links in the description if you haven't joined the Discord. We've got a lot of alpha in there. We've got a trading group with our WAP upperclassmen. We've got some nice trade calls in there that we do multiple times a day. So if you miss the alpha, or you want more of the alpha throughout your day, make sure to join that WAP upperclassmen. Later in the day, we do have, as I had said, the Piper and OC Guy with our morning market report. And tonight, we've got TradeFly and FD White going live at 8:30 Eastern PM, and it will be the crypto nightcap with the rest of the alpha you need to end your day with. It looks like Lunar Beaches said 11 to midnight Eastern time. So markets after dark, super late night show coming on. I don't know if that's going to be Monday through Friday as well, but 11 p.m. to midnight Eastern time. I'm assuming Monday through Friday will be Lunar Beaches and the new Markets After Dark. So if you get a chance to watch it live, watch that live. If you don't, and you're like me and you're already asleep at that time, go give it a watch afterwards, because he has lots of alpha in there and lots of trading strategies that I know that he's been building up that he will be dropping every night. So Piper Academy is bringing you more and more alpha throughout the day. So give us a little like and a subscribe if you haven't done that yet. He says Sunday through Thursday. So thank you to everyone that tuned in today. I got to end up heading on out. It is almost time to go to work. So everyone wake up, because today's going to be a good day.